Hi, welcome to the Market Alert for Thursday, 1st of Feb 2018. So yesterday in the pound, we saw this moving lower. Not much of a range, the market waiting for Yellen, which you'll see here is when she came out and had a chit chat with the market, very hawkish, inflation based. FOMC minutes, her last ones, and this sort of dollar moved higher initially. And speaking of the dollar, it's slightly higher on the overnight here as well. You can see the last few days consolidating but moving back towards the upside there today. So yeah, it could be a bit more on the downside for the pound. If we look at the daily chart, you can also see that we've got prices at the 62% or in between the 76 and 62, so a bit of weakness there at the moment, but the market needs to consolidate after the move up that we've seen recently. There you can see how the market's moved higher, and again also trading to the 76% retracement there, and close to the 143.87 level. So the market is due for consolidation or a bit of a pullback there. And in the Dow yesterday, nothing in the first part of the session, apart from the market. It was bought and then it was sold, and then you can see this fight back and forth, selling, then buying back at crucial levels. Notice how the market finds support here, finds support there, and then through here, all the way through until Yellen speaks. And then eventually the market gave way, didn't hold any longer, and you see the selling coming in, and then we see the market being tested at this level before it's turned around and moved back to the upside on the overnight with three lovely professional buying bars. So shake out the weak holders and bring the market back, and in the bigger picture you'll see what's going on here. We've got a correction in this market. We've been waiting for one. The volatility's been up nicely, and the market's free now to resume its upward trajectory as it has done for the last 10 years. Well, it's not quite 10 years, 9 years. March 2009 this move started, so we could head back to these levels quite comfortably. But with Trump's tax reforms, money coming back to the US, there's a lot of potential yet still in this market to the upside, unless of course there is other issues of which Greenspan has noticed. We're in this mess because of this chap. He's 20 odd years at the Fed, printing money, quantitative easing. Well, he didn't start the quantitative easing, that came under Greenspan, but yeah, he's the man who started the Keynesian policy of printing money and seeing the debt explode. But he's the granddaddy of all bubble makers, and he has said we have a stock market bubble. There are two bubbles. We have a stock market bubble and a bond market bubble, and at the end of the day the bubble will be the big issue. That's the bond bubble, sorry, I meant to say there. So the bond bubble is definitely the one to watch, as we've seen with the yields rising. And speaking of which, let's just have a quick look at those whilst we're here. So let's see what we've got. 2.73. Again, we have to go to a 5-year chart just to see the bigger picture. As I told you before, I do like these bigger pictures. You can see exactly where you are. Again, we've got that 3% in 2014, and it's definitely on the rise. I've got problems in Europe with the German 10-year bonds also moving above the 0.5% as well. So certainly interesting there, to say the least. Right, let's have a quick look at the implied. The implied volatility is down on Tuesdays, Wednesday 12.79, 13.56, and that's because Yellen's now out of the way. This is pointing in the right direction as well. So again, all of these things coming back together to say that the correction in the Dow is a temporary thing at this point. Right, let's finish off with a quick look at Bitcoin. And in Bitcoin, yesterday has to be one of the quietest days I think I have ever seen in this market. Look how narrow yesterday's range was. A bit sideways to lower today. But yesterday, incredibly quiet there. Let's just alter this a bit so you can see it a bit more clearly. So very, very quiet, considering that Monday's range there was quite a lot to the downside, over 1,000 points, but yesterday very, very quiet indeed. And again, just to reiterate what I've been saying for the last few weeks, you can expect this market to remain consolidated at least for another couple of weeks before you start to see this move back towards the upside there. Right, that will do it for this one. Actually, just have a quick look, see what news we've got out today. We didn't do that, did we? Let's just bring this up so we can see. And what is there today? Nothing really. And so the market's really ignoring the news. When you look at the release of the FOMC minutes, you still get virtually nothing, whereas from 2008 to 2016 you used to get a huge amount of volatility, but you just don't get it anymore. It's as if the central banks were taking over all of the areas now, including the reaction to news. Bizarre. You can see that it's no longer a free market as it was 10 years ago. Right, that will do it. As anything to report, I'll let you know. Other than that, as ever, thanks for watching. See you in the next one.